Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Tuesday, March 10th, 2020, and we again find ourselves in the final hour of the trading day. I mention this each day, but I believe the most valid prices and the time to make your buying and selling decisions for the day is right at the end of the market, right before the close. During the day, you have the day traders, you have the algorithms, battling it out. At the end of the day, the large financial institutions come in with size and they take control away from the day traders and algorithms, and they start moving prices. And I like to piggyback and make my decisions based upon what they're doing. They're the most well equipped, they have the best information, they're dealing with the most money. So I would rather hitch my wagon to those guys and make my buying and selling decisions right at the end of the day. So anyway, thank you all for coming out. I really do appreciate it. It's always nice to have you here. Always look forward to seeing you all. Boy, what a day in the market so far. Currently, the Dow Jones is up 591 points. We were up in the morning 1,000 points, right? Back to our 1,000 points, up or down. Then we went negative on the day, and now we are back. Dow Jones is up 593 points, up about 2.5%. NASDAQ is up 234 points, about 2.95%, and the S&P is up 74 points, up 2.71%. So the volatility just continues up and down. So all we can do is, make our plan, position size correctly, and take our signals and exit our signals when we're supposed to. That's about all we can do. So anyway, let's take a look. Hey, Evan is here. Good to see you, Evan. Always nice to see you, buddy. Miko25 is here. Hello. Good to see you. Bob is here. Hi, Bob. Thank you. Kamal. Hey, Kamal. What's going on? Good to see you, my friend. And Zach is here as well. Good to see you, Zach. And Deanne is here. Hello. Good to see you, Deanne. Hope you're doing well. Hope you're having a good day. So, all right. Well, crazy day again after yesterday. Boy, yesterday was just brutal. When I just reflected on how brutal that was yesterday, I've been trading a long time. I've never seen a 2,000 point down day. So that was pretty intense. And, I mentioned yesterday about if you've had losses yesterday, which I certainly did, it's important that you have the mindset that you are going to just continue to trade correctly. You have to understand that it might take a while to make those losses back. As I mentioned yesterday in the psychology section, if you try to make those losses back quickly, it's possible, but it's also possible that you're going to lose a lot more money and add insult to injury. So I'm going to be talking about that a little bit in the psychology section today. All right, Dan is here. Wishing you all the best, spies. Thank you, Dan. Appreciate it. Wish you the best, spies, as well. And Mount Doji. Hey, good to see you, Mount Doji. Appreciate you being here. All right, so listen, here is the plan for today. First of all, we're going to run the U.S. legal disclaimer. Secondly, we're going to come back. We're going to take a look at my current positions, talk about when I bought them, why I bought them, how I'm going to manage them going forward. We do have a couple positions from you up on the board, and we're going to go over those as well. After that, we're going to talk about trader psychology. It's very important. And a market like this, I think, should really drive the point home to you as far as not being impulsive, creating a plan, position sizing correctly, sticking with that plan. And if you can't stick the plan, or you find yourself not sticking to your plan, then you have some work to do on yourself, because it's important to learn how to trade. It's important to analyze a chart, support, resistance, indicators, entries, exits, all that kind of stuff. But you learn this so that you can formulate a plan. But you can be the best chartist in the world, you can have the best plan in the world, but then totally fail miserably when it comes to following your plan. So if you find yourself having issues with that, you need to work on that. Think of it as a skill. It is a skill. And if you find yourself not being able to follow that, then you need to sharpen up your skills. And that is probably the best way, is to position size correctly or conservatively. That will take some of the emotions out of the trade. limit yourself to, a certain amount of trades per day or a certain amount of positions. You don't want to have too many positions, right? So we're going to talk about trader psychology, always important. That's why I like to touch on it each day. Hey, Steve Burns, good to see you, my friend. Always appreciate you being here, Steve. Always an honor to have you here and be able to have you in the chat. And thank you yesterday for answering questions when I had that issue with my streaming software. I really appreciate that. Steve says, we are in a historical market, times in both speed and magnitude of the drops and high volatility levels. Boy, I would say it's going to be strange when we go back to a 200 or 300 point up and down day. Really, won't it? I mean, it's crazy. By the way, Steve put something out on Facebook about what's going on in your area with the coronavirus. Actually have somebody in my town that has it today. Probably a hospital 3 or 4 miles away. So, wow, you hear about it in other countries, but when it actually is right in your hometown, kind of brings it home, doesn't it? Steve says the oil and energy sector stocks just destroyed yesterday in a big XLE reversal today. Yeah, a lot of reversals, a lot of big up days today, but of course that's volatility, right? The bigger you fall, the more natural it is for when you bounce that it's going to be somewhat big as well. So, all right. So after we do the psychology, I have identified some possible entries, new entries today. When I look at entering a new position, I have 3 criteria. First, I look for a combination or a confluence of indicators lining up on the chart. I look at those as not lines or numbers, but I look at those as groups of buyers. And if you want to put yourself in a position to have the best position to have a profitable trade, you want to be in the company with as many other buyers as possible. So if one indicator represents one group of buyers and another indicator represents another group of buyers, and so forth and so on, then you have more groups of buyers coming together at the same time on the same time frame. So I look for a combination of confluence of indicators or groups of buyers is another way to say it. Requirement number 2, I want to make sure I have a good risk to reward ratio. I want to be able to risk less on the downside than I can potentially make on the upside. If I'm going to risk $100, I want to be able to make $200 or more to the upside based upon valid resistance levels above me compared to the support. And number 3, correlation. Correlation is super, super important right now. Everything is moving together. I don't want to have 3 tech stocks, or I don't want to have 3 healthcare stocks. If they go up, then yes, I do 3 times as great. But if they go down, I do 3 times as bad, right? And risk management should always be our number 1 focus here. Not, yes, of course we can make tons of money if we buy tons of tech stocks and they go up, but always think about the loss first, because the losses, you lose your money, you're out of trading, right? So I think most people would make a little less on the upside to have a better chance to stay in the game. So I have identified a few. We'll just have to see how this market closes. I wouldn't be surprised if the market closes much higher. I wouldn't be surprised if the market closes much lower today with all this volatility. Then at the end of the day, if any of those trigger and look good, qualify, I will go ahead and add a new position at the end of the day. After the market closes, if anybody has any questions, please let me know. I'm happy to clarify. If you have any stock symbols that you would like me to take a look at, I'm very happy to do that as well. If there's any symbols that you would like to get my opinion on and you think would be important or helpful for the group, please put them in the chat. Put a star by them so that I know they're time sensitive. Otherwise, I'll get to them after the market closes, but if they have a star by them, I will do my very best to get to them before the market closes. All right, so that is the plan. So hang tight. I'm going to run the U.S. legal disclaimer, and I'll be back in about 40 seconds. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. Marco is here. Good to see you, sir. Always appreciate you being here, Marco. Hope you're having a nice evening. N Styles 420. Got 4 people here. Oh, wow. Nice. Thank you, 420. Coming by. I appreciate it. Always good to see you. Andrea. Yeah, we had a teacher here at elementary school come down with Corona. Oh, goodness. Hi, Andrea. Good to see you. Zach says, Greg, what does fill the gap mean? I have heard it frequently, but don't follow it in all intels. Okay, so, let's take a look at SPY. A couple days ago, we had this bar, we had the low. Yesterday, we have the high. See this gap in this area right here? That's called the gap. Now, a gap fill would be if we filled the gap. Like, let me do this. I wish I could do this in real life. See, if the market did this today, that's what would happen. We have this gap from the low here to the high here. If today we came up and closed the gap, see, nothing has been traded through here. So this is closing the gap. But I manipulated the chart. But here you can see this gap is still open. And a lot of times gaps tend to get filled. They're vacuums. The market hasn't tested those areas. And so that is what a gap fill would mean. If you have a lot of gaps in a row, it's a pretty good chance that you are going to get some of those gaps filled. It doesn't have to be that way. But probably the market's going to want to go and test these areas in here. But it doesn't have to, but it does happen often. Deanne says, President said airlines and cruise industries are potential benefactors of the monies of the dollar help. Yeah, I've read that. And they're bouncing today. But boy, are those scary. But yeah, it looks like they're going to help out the airlines and the cruisers. Quad Racer says, good afternoon. I hope everyone is having a good week so far. Thank you. Appreciate that, Quad Racer. Frank says, oh, here we have a poem. This market is nuts. No ifs, ands, or buts. It's up and it's down. We'll spin you around. The agitation you'll find can really be mean. Come to think of it, sure works great as a washing machine. Ah, bravo, Frank. Wow. Good stuff as always. Thank you, sir. Let me copy that. This market is nuts, no ifs, and or buts. It's up and it's down. We'll spin you around. The agitation you'll find can really be mean. Come to think of it, it sure works great as a washing machine. So good. Zach says, awesome, Greg. Thanks. Makes a little more sense now. Good. N Style says, I met 4 people confirmed with coronavirus in my area. Sorry for the confusion. Oh, okay. Well, shoot. That's not as good. Dang. Where are you from? N Styles 420. Glenn says, hey, Greg, looks like markets want to recover 50% of the fall from Monday playbook matches 2011. Be careful as Wednesday could be another test of the low. Yeah, I agree. I mean, I was thinking exactly the same thing. We've recovered about 50%. And as you know, not every time, but a lot of times, if you drop 100 points, you might rally 50 points and find resistance. But we dropped 2,000 and rally 100. It's the same thing. It's just that 50%. Yes, very, very good. Very good point. Mohammed, hey, Greg. Hey, fellow traders. Hello, sir. Good to see you. Frank says, thanks, Greg. Okay, well, let's get to it. I was going to mention to everyone that I had some people tell me they were following some other live streams and so forth and so on, and they said, I don't know if they're ever really making correct trades because they don't show where they entered or exits, like from their trading platform. And I mean, I kind of understand it. But you know what? I decided that it might be a good idea to be able to just share with you my transactions for the day. And you can see I have 2 trades here. I sold SPY at 284.76, and I did sell some puts on Apple at 130. So I think I'm just going to show you this every day just so you can actually see where my entries and exits really are, just for transparency's sake. And I also thought that it would probably be good for me, because I told you yesterday, I have that angel and devil on my shoulder. And sometimes that devil's like, buy a lot of shares. It's too low. And I'm like having to fight it and battle it. And I thought, you know what? If I just show the group the transaction, that's going to keep me in check, and it's also going to be more transparent for the channel. So from here on out, I am just going to show you all my entries and exits, warts and all, for transparency's sake, and I think it will be good for me as well. So I am going to start incorporating that so you guys can help keep me in check, and hopefully will be good for you too. Hey, JT is here. Good to see you, JT. Always nice to have you here, sir. Coachella Valley, Southern California. Okay. 4 people. Wow. Okay, well, let's get to it. World famous SPY trade. Well, I'll tell you what, world famous SPY trade has not been so world famous lately. It has been pretty brutal in 2020, but I am sticking with it. What I do is I buy the SPY every day at the close, and I sell it first thing the next morning. And has nothing to do with technicals or resistance or support. It has to do with just a long-term back-tested study of buying the SPY at the close, and selling it first thing the next morning. But this is from Liz Ann Saunders, at Bespoke Invest. This back test is every day since 1993. 2 options here. First option, buy the SPY at the open, sell it at the close. So buy in the morning, sell in the afternoon. If you do this every day since 1993, you'd return a negative 13.9% return. However, if you do what I do and buy the SPY at the close each day instead of the open, sell it first thing the next morning. So buy the close, sell the next morning, buy the afternoon, sell the morning, right? You'd actually return a positive 634.2% return. Past performance is no guarantee of future results. That is true. But to date, it has done very well over time, right? Here's the equity curve. The buy in the afternoon, sell in the morning equity curve is nice, upward sloping, but it has some pretty brutal downtrends along the way. And that goes for any trading approach. You are going to have drawdowns. Not any trading approach is perfect, at least none that I know of, right? So me personally, I am in a drawdown right now. But that is why I do buy the SPY at the close, sell it first thing the next morning. So like I said, it's been pretty brutal. It has been pretty brutal, but actually today did have a good trade. Bought it yesterday at the close at 274.23. Sold it this morning at 284.76. So pretty big move. Now, good news, bad news. Good news, nice gap up. Bad news, I bought a half a position yesterday because of the volatility. So still had a nice green day on it, but it was half of what I normally would have made. But the volatility did scare me. I wanted to stick with it, but the volatility did scare me. So anyway, glad to have this going our way, or my way, today. Secondly, haven't sold any puts recently, but I did sell a put on Apple. I sold it today, expiring Friday. I sold $245 cash secured puts down here. Let's take a look. You can see here on the monitor, I sold them for $1.30. So that's $130 per contract if the market stays over, if Apple stays over 245 by Friday. It's about, I don't know. Let's take a look here. 13% protection, which is pretty good. I don't think I would have a problem buying or managing if I had to buy Apple down here at the 200-day. So down to 245, I'm good, but I would be interested in buying Apple anyway down here. And because of the volatility, you're getting so much. You're getting $1.30, $130 per contract with 13% position for 3 days. So I like it. That's why I sold it down there. So that is all that I have. I had to get out of a lot of my positions yesterday with that brutal day, but anyway, that's how it goes. Frank did buy Clorox here at 176, 171.66. He sold half of his position at 177, which is fantastic. I believe he still has half. I'm not sure if he got out yesterday. So Frank, if you did get out, if there's any change to that, please let me know. But that's been a nice trade for Frank so far. And then IBB. So it looks like Steve did buy IBB yesterday here. I think 110.99. Earlier in the day, it looks like it had lost its 200-day moving average. Currently, right now, it is above the 200-day moving average. So, Steve, if what I've said is incorrect, anything, please let me know. But I am looking at possibly buying IBB again today with the rejection of the third ATR channel and the 100-day moving average. So I'll just have to wait and see. But if Steve would have panicked down here and gotten out, and he would have been kicking himself, right? That's why Steve waits till the end of the day to make his buying and selling decisions as well. Zach says, that's very cool, Greg. Thank you. Your transparency on a regular basis is what makes this the best stream. Oh, thank you. Thank you, Zach. Ryan says, even before that, I could tell you were legit. Thank you, Ryan. Glenn said, Amazon is back above the 200. Yes, it is definitely one of my possibilities today for a variety of reasons. So we'll look at that in a minute. Ryan says, I've always been in a few rooms, and you can always tell the real deal. Oh, good. Tom Bassel said it is. Is it me, or does every chart in the future stock look like something falling out of a plane or fighter jet turning it skyward with full afterburnings on? Crazy charts out there with gaps. You know what? Actually, Steve, in the psychology section today, I have a quote from Tom Basso. How about that? So I'll get to that in a minute. Kamal says, Google and Amazon over under 200. Yep, I have both of those marked, and we'll look at those. Steve says, I will be stopped out of IBB if it closes under 200 day. Yep, that's what I thought. Hey, Bing He, good to see you, my friend. Always nice to have you here. Okay, so listen, before we go through the list and look for my potential setups for today, I do like to do a little bit on trader psychology every day. There's some really good Facebook channels out there. There's some really good Twitter channels out there. They spend a lot of time and effort posting good information, good training words of wisdom that are totally free and are very helpful if you just read them and internalize them. This is from Uzair Hussein. This is over on Facebook, on New Traders, Rich Traders, and Mr. Hussein is with Tom Basso at the moment. But here's Tom Basso. Think of, and if you don't know who Tom Basso is a legendary trader. He was featured in Market Wizards as one of the trading market wizards. So you've probably heard his name before. I know Steve's friends with him as well. But I read this. I was like, hey, I say that all the time on the live stream. Think of the next trade as just one of the next 1,000 trades, right? You've heard me say that a million times, and it's so true. When we have these volatile times, when we have drawdowns, like I've had drawdowns the past couple weeks, it's tough, and like I mentioned before, you want to make it back. You'd like to make it back quickly. Who wouldn't? But, revenge trading, going into fight mode and battling the market, sometimes it works. More times than not, it doesn't work. I think if you have had losses, really just go, okay, it's a reset button. This is going to take me a month or 2 months to make back these losses, but it's okay because I'll continue to trade. I'll continue to improve. But don't look at every trade as like do or die. Change your lifestyle. You're drawing the line in the sand at this one trade. You're either going to make it big or you're going to be out on the street, right? Don't do it. Don't risk everything on one market downturn. And the best way not to do that is just to get in the mindset of think of the next trade as just one of the next 1,000 trades. It's like a casino. If they lose 5 hands in a row, they don't run around with, clutching their pearls. They're like, okay, well, they're going to have hundreds of thousands, if not millions of rolls of the dice or a roll of the ball or a deal of the cards coming, and they're going to they'll make that back over time, but they're not trying to make it back right that second. So Anyway, great advice, Tom Basso. Thank you for that, and I hope everyone out there, will take this in. And if you've had a drawdown, just one day at a time, trade correctly each day at a time. Don't try to make it back quickly. If you do, in my experience, you're going to lose a lot of money and be frustrated and give up and be done with trading. So if you've lost money, just remember a lot of people have lost money, but be in this for the long term. So thank you, Tom Basso. Thank you, Uzair Hussein, for this really good trade over on Facebook. And it's New Traders, Rich Traders on Facebook. And that's a good channel. Frank says, I was stopped out of my second half position just above my cost. Okay. Well, let's take that off the board then. Nice trade, Frank. Okay. Bing He says, I will be skipping SAP and Penn, though it is good setup for me due to the volatility and the stop loss. Let's take a look. Yeah, I'll tell you what, I'm a little concerned with just under 30 over 30s at the moment with this volatility in the movement. I really want to have a setup that has more than just one indication. I mean, like Glenn said, we've rallied maybe 50% of what we gave back. But a lot of times things fail there. I'm not saying it's going to, but it could. But I think that's probably a good idea. Pen. Well, now that one's a little better in my opinion, just because this SAP was under 30 over 30. This one's under 30 back over the 200-day moving average. So I do actually like that one better. Mount Doji, Adobe looks interesting, and I like GME. Let's take a look at Adobe. Yeah, Adobe had that big bounce off the 200 yesterday back over the 100-day moving average. The only thing, Mount Doji, here is, what's going to be your risk? Is your risk going to be the 200? If your risk is the 200, I would identify like the 50-day moving average up here as some possible resistance. So for me, that looks like it's, about only a 1-to-1 ratio. Now, sure, you could use the 100-day moving average and give yourself a better risk reward ratio, but on the other hand, you're keeping it pretty tight as well. And you do have earnings coming up here, so keep that in mind. And game. Yeah, we have a higher low V2. Zach, if you're out there, do you see the gap we've had today from here to here? We didn't come back and fill it, so this gap is open. That's why I don't like taking trades when there's a lot of gaps involved, because the market tends to want to come back. This one, I mean, it is a V2. It's not a valid V2 in my opinion, because it has this, and it also has this one ATR channel. It's right up here. You have the 50-day above it. I just don't think it gives a good risk to reward ratio, to be honest with you, but that's just my opinion, Mount Doji. Glenn says retest of 28 February low at 28.55.84 or 28.63 is the high yesterday. Let's see how we finish close. Yeah, it'll be interesting how we finish. Steve says it looks like teal cheat chart may have put in a short-term top after achieving all-time low yields. Yeah, that, if you remember yesterday, I was mentioning that big bearish reversal bar yesterday, which, sometimes, not all the time, can represent, a short-term top. It is definitely bearish. Yesterday after the market closed, that the futures were down 400 points again. But then President Trump came out and there was some talk about some tax cuts or some other relief, for the coronavirus, and the market seemed to like that. I think that's why we're up today. Okay, well, we're doing good on time. So I think Mount Doji says, I like GME weekly too. GME. Well, I think it gives a better risk to reward ratio, but the question here is really what's your trigger, right? There was no V2 last week. Um, but yeah, I mean, if you decide that, you're going to trade it off of the weekly, then, maybe if you bought here, maybe up to here would be your potential profit with the loss down to here. See, that makes sense, but I honestly don't see a trigger on the day, on the weekly either. Zach says, yes, thank you. Thanks, Greg. So the market tends to naturally try to fill those gaps when they are formed due to large after hours or pre-market moves. Yeah, a lot of times. I mean, they're just untested. They're untested areas that the market has not tested out, and it's kind of a vacuum and the market doesn't like vacuums. I mean, not to say that there are not gaps that have never been filled. I mean, there are, but I mean, let's look at, I don't know, take for example, that's not good either. I'm trying to find, well, if you can see up here, see this big gap here from here to here? That gap's never been filled. Will it eventually be filled? I don't know. Carnival Cruise is up pretty good today, right? 6.53%, but there are gaps that are unfilled. But if you get multiple gaps, I can't remember who it was in Market Wizards. One of his favorite approaches, waiting for several gaps in a row and then buying. I can't remember who that was. Steve Burns says, Trump just pitched 0 payroll taxes. Wow. For the rest of this year, White House officials say. Well, that would definitely get the market going, I would imagine, right? I got to tell you, trading can be so tough and frustrating. I mean, of course, yesterday I had a lot of positions and I got stopped out with emergency stops and then it comes back up. It's frustrating, right? It's insult to injury. It's insult because I lost money on a bunch of trades yesterday. Today, I've had a couple good trades up at least so far with the overnight, but it's frustrating and it can destabilize you, and that's why it's so important. Even if you get out and then it goes roaring back up, I get it. It's frustrating. Don't let it affect you. Just take one day at a time. Be in it for the long term. I know it's frustrating. I get it. I was frustrated, but at least take comfort in following your plan. Following your plan over the long term is really what's going to make the difference to whether or not you're going to be winning trader or losing trader. All right. Well, we have time, so what I'm going to do, let's quickly go down through the charts here, see if anything's going on. Okay, starting with Apple, I did sell puts down there, 245. I showed you my screen. I sold them at 130. Currently, they're at $1.02, right? So that's good. I want them to go to 0, right? So I've made 28 cents on those times however many contracts I've had. So anyway, there's Apple. Have no problem buying it down here and managing this trade around here. But the premium that I got was so high. I mean, it was like 0.75% just for holding 3 days with 13% protection. Now, keep in mind, it's dangerous to sell puts. It is dangerous to sell cash secured puts. I mean, you really, really have to want to be able to buy something down if it gets down there, right? Some people do, bullish credit spreads where they buy puts underneath for protection, but anyway, I chose, now, not a huge position, just a regular size position, right? If I was going to buy $100,000 worth of a stock, I just would sell $100,000 worth of puts, right? It's not like I'm loading up on puts. It's just like another position. So Has that from a technical standpoint, it does have the 100-day above it. That will probably act as some kind of resistance, I imagine. Adobe, nice bounce off that 200. Couldn't buy it now, though. I just don't see the risk to reward. Amazon, I do like Amazon here. We went under the 200, over the 200, under the 250, over the 250, under the negative third ATR channel, over the negative third ATR channel, right? False breakout to the downside from this previous low. Good, really good, well-defined stop below me, which would be the 200-day. I like how it's halfway. So this one is one of the very top ones on my list today. Boeing is just down. Oh, here we go. Zach. Here's a huge gap on Boeing. See the gap? See how it hasn't been filled? Can it be filled? Possibly. You know, does it have to? No, it doesn't. But, you know, there's low and then there's too low. And Boeing is just too low right here. Berkshire, big gap. Tried to fill it. Didn't quite fill it all. Went from under 30, over 30. It looks like it rejected the negative third ATR channel. So I'm not really interested there. Beyond Meat, I don't really see anything there either. Caterpillar, huge gap here. Whether it will be filled, I don't know. It's just too low. It's at a 2062, just too low. Man, Caterpillar has fallen off a cliff. DDM, which is the Dow Jones Industrial Double Leverage, did go under 30, over 30, so it is a potential. That's all it has, though. It's not a false breakout to the downside from this previous low. One thing I do want to point out, we do have a pretty major RSI divergence. We have the low, we rally, we have a lower low. Look at the readings of the RSI here. Look at them here. See how this is higher reading even though it's much lower? That is pretty positive. That is pretty positive, but I think I am going to stay away from that. And I'm going to look for ones that have only multiple indicators here. Under 30, over 30, same on the Dow. Walt Disney, whoa, big move up today. That one's not bad either. That one's not bad either. You have a V1 under 30, possible over 30. So let me all right, that's a possibility. How are we doing on time? Okay, we're good. Etsy has been a lot stronger than the rest of everything else. I can tell you that. Back in the value zone, but I don't see anything there. Facebook, under 30, over 30. But again, it's just under 30, over 30. That's all that I see. So I'm going to take that one off the board. Gold, like bonds, has come back down. Looks like we've caught support here at the 1 ATR channel. Google, under 30, over 30, and over the 250. So that is possibility. Goldman Sachs, big gap, still under 30, so nothing there. Home Depot, big strong move over the 200-day moving average. Dividends tomorrow. At this point, I don't like the risk to reward on that one. IBB, we talked about that. Yes, this is what Steve bought yesterday, so he is up on this trade now after being down earlier in the day. Nice big washout of the 200, close back above the 200, under the negative third ATR channel, over the negative 30 ATR channel. False breakout to the downside from this low and close back up. Good risk to reward, so we'll watch that. Intel, under 30, over 30, may close back over the 200-day, but, you know, there are a lot of, I think there's some better signals than that. IWM, up slightly today. I don't see anything there. Johnson & Johnson, big move off the 200 too high. CarMax looks like it's under 30, over 30, but that's about it. Coca-Cola, I don't see anything there. Lockheed Martin, under 30, over 30, but that's about it. MasterCard under 30, over the 250, possibly over the negative third ATR channel. We can look at that one. McDonald's, big day, but I don't see anything there. Merck, I don't see anything there. Microsoft, looks like it's coming back over the 100. I don't see anything there. Netflix, no. Nike, no. Under 30, over 30, that's all. PayPal has that 200 above it. Qs look pretty good also. We bounced near the 30. We're back over the 200 and the 250. False breakout to the downside, so that's a possibility. Silver, no. SPY, I am going to be buying that at the end of the day. SSO under 30, over 30. That's about it though. TLT, we talked about that. Big sell-off on bonds. Tesla, I don't see anything there. Twitter, I don't see anything there. United Continental up 12.43%. Wow, that's big. Hasn't regained the 30 RSI. Natural gas, huge day. Oh my gosh. Wow, look at that. United Healthcare, nothing really there. Oil up 11%, but okay, Zach, talk about a gap. Here's your gap, buddy. Look at that. VIX is down, not as much as you would think though, with the market being so high. So we're up 900 points. It's insane. Verizon, I don't see anything there. Walmart, up a couple bucks today, a little too high for me to buy there. Energy Select having a big day up, but still under 30. XLF having a nice day. Real estate, big bounce there. I don't see anything there. Utilities, no. And healthcare. So let's tighten up this list a little bit. Now, listen, it's important about taking too many positions at one time, being too correlated, right? I mean, I have to take this into consideration. Okay, I have Apple, right, which is doing great. Let me take this over here. All right. I am going to be buying the SPY trade. Have to keep that in mind. So let's go down through and take a look. Amazon. False breakout to the downside, under the negative third ATR channel, over the negative third ATR channel. Under the 200, under the 250, back over both. 42 RSI. Does it give me a good risk to reward ratio if I'm kind of keying off the 50? Yeah, it does. Let's look at the weekly. Weekly rejected the 100-day moving average, 100-week moving average, and the negative 1 ATR channel. So yeah, does look good. MACD still positive on the weekly. So, that's definitely a possibility. Walt Disney. It's a nice V1. Here's day one, here's day two. Day two washes out day one, closes above. That is good. We have the 5-day moving average right there. Here's that previous low there. That's right where it's getting stuck. It's a 30.55. Just going to have to swing back and take a look at this one at the end, because the only possible way I would buy it would be a close over the 30 RSI, and I'm not quite sure if that's going to happen. Google, well, under 250, over 250, under 30, over 30, rejected the 200-day moving average. You see how we're still not above the negative third ATR channel? When I look at this as going to be resistance above, compared to Amazon where we're already above it, right? So when I look at this, I look as the 100, the 200, the 250, and the negative third ATR channel being support below me. That's good. If I look at Google, right now at least, I have the 200-day moving average as resistance above me, the 5-day, and the negative third ATR channel above me. So if I look between Amazon and Google, Amazon has more support underneath me than Google has. The only thing Google has underneath is the 250 and the 30, but it has more resistance above with the 200 and the negative third ATR channel. And I would never buy Amazon and Google at the same time, right? Because they're both tech stocks. And I just have a rule where I'm not going to buy two highly correlated stocks at one time. Now, if I bought Amazon today and then Google popped back over tomorrow, then yeah, I could take Google then. But then I have another rule where I'm not going to have two of the same stocks total. I can't buy two on the same day, but I can have two if I buy them on different days. So I'm going to take Google off. IBB, let's look at the weekly. Well, did definitely support the 100-day moving average and the 50-week or 100-week moving average and the 50-week moving average. I have the negative third ATR channel underneath me. I have the 200-day underneath me. It's a false breakout to the downside. Boy, did we get to 30 RSI today? Let's take a look. Pretty close, not quite. But the risk to reward is good there, right? With the 200-day underneath. MasterCard, good, but still has that 200 above. Again, things are going to move up and down at the same time, right? Most of the time. So everything in a way is correlated. So I don't like MasterCard here as much. Let's look at the weekly. Still has the 50-week moving average above it. So that takes some points off. I'm going to get rid of that. And then the Qs. Now, I'm not going to buy Amazon and I'm not going to buy Qs on the same day, right? I'm just not going to do it. So let's take a look here at Amazon again. Let's look at the risk to reward, theoretical rewards here, risk down to there, makes sense. Not a lot of volume today, interestingly enough, but it is a good risk to reward. Now, how does that compare with the Qs? Well, I guess it depends how it closes. Qs did reject the 50. I mean, they're going to go the same. I mean, Amazon's up 4.5%. The Qs are up 4.19%. A little bit more of an RSI divergence here. Here's the low, here's a lower low. It was low, here we were a little higher. Amazon also has that, but not as much. $50 RSI is going to be up around here. What do I have? 10 minutes left. So I've got a confluence there of that 50-day and 50 RSI right about there. So the risk to reward makes sense there. The Qs do make sense there. They both backtest well. Walt Disney. I think I'm going to let IBB go, and I'll tell you why. It's just because it is a good rejection of everything, and it would be well diversified. I don't like that the close now is actually lower than the open. So I think I'm going to let that one go. Look at the weekly again compared to the Q's weekly. See, the Q's has this 100-week moving average above it. Sorry, a negative 1 week Keltner channel above it, where Amazon is already in the value zone. I think there's a better chance of it going to there. So that's what happens, when you have a lot of signals, you're going to have a lot of similar signals and so forth. Walt Disney, it looks like it has rejected the 200-day. Well, well. All right. Steve says, this is the most volatile market over a decade. Being I bought SAP as I can set my stop loss at 30 RSI, which is still below 2% for my entry. Okay, good. All right. If you have a price, Being let me know, okay? Uh-oh. I hope my chart's not crashing. That wouldn't be good. Oh, no. Come on, baby. Pull through. Pull through. Hopefully I can get this baby up and going again. Sorry about that, folks. Okay. Sorry about the blank screen. In the meantime, let's read that over again. Come on, Trade Navigator. Come on, baby. Okay, it's looking good so far. Come on now. Come on now. Okay, we're closing in 5 minutes. Okay. Whew. Ah. Whew. All right. All right. Amazon, Disney, and the Q's were what I were looking at, right? All right. I think what I'm going to do, I'm taking a half position on Disney because it's under the 200 day. Yeah, that makes sense. All right, I'm taking a half position on Disney because it's under the 200 day moving average. And Amazon, taking a full position. Yeah, I'm going to take Amazon. I'm going to take Amazon full position, Disney half position. All right, I better get to work here then. Okay. Disney. Okay. All right. Wow, that Apple put's really done well. I sold it at 130, now it's at 75 cents. So that's nice. And then, of course, I'm buying the overnight SPY trade as well. Okay, so that's taken care of. Mount Doji wants to look at love. Under 30, over 30. That's good. Above the negative third ATR channel, that is good. Also, it's a false breakout to the downside here as well. So yeah, all good. You know, the airline's doing pretty well today. Mount Doji, thoughts on Micron? Yeah, I mean, rejected the negative third ATR channel, 250 and the 200. That's good also. Take a look at Google. Yeah. Oh. Wrong Google. Yeah. I don't like it quite as much because it's not over the third ATR channel there. Negative third ATR channel, excuse me. Okay. So have the Apple puts down to 245. Amazon, I got filled at 1886.17. 1886.17. Disney, I got filled at 111.34. And then SPY 288.42. Okay. There we go. So here's the little chart, everybody, just so you can see. So I did sell SPY this morning at 284.76. Sold the Apple puts, the March 13th 245 puts at $1.30. Bought Amazon here 1886.17. Disney 111.34, and the SPY, the new SPY, got here at 288.42. 288.42. So again, the Apple down to 245. Amazon full position because it's over the 200-day moving average. Disney half position because it's under the 200-day moving average. And then the SPY. So that looks like a pretty good mix. Got some tech, got some entertainment, and then have an index, and then, well, we have the SPY over there as well. Apple puts, I mean, which is a little different approach. So not too crazy, not too wild as far as positions, but worth something, right? If it's able to go up. So but yeah, Micron's not bad there, that's for sure. Okay, SAP. $116.86. Oh wow, you did well, Bing He. Bing He's done well already. Okay, and then did Bing He have something else? No, that was it. Okay. So if anybody has any other any other positions that you entered today and you'd like to get them up on the board, let me know. Kamal, if you have any, or Steve, if you have any, please let me know. But anyway, glad to get some green back on the board. It seems like it's been a while, but this was all in all, I mean, pretty good. You know, it's honestly a drop in the bucket from the last couple weeks, but it's progress, right? Wow. Just noticed here, my Apple puts actually made half their value in a half a day. Wow. Good. Amazon's up a little after hour. Disney's down a little after hour. SPY is down a little after hour. We'll see. We'll see if we have another one of these huge, big whipsaws. I don't know. We are going to see. Okay, so Kamal bought Amazon. Okay. Good. Oh, you bought them earlier in the day, and since they are getting closed about FSMA, keep both. Okay, nice trade, Kamal. Very nice. All right. So I don't have them in there at the right price, but we'll just go off there, not to confuse. Glenn is an Amazon. All right. All right, we got you in there. Oh wow, you're at 1871. Okay, I'm not going to put everyone's price in because then it will be confusing. But we'll just go off. We'll just go off of today's close just so we can keep it consistent. Okay, what about Steve? Did Steve mention anything? Let's take a look. See. Okay, so Steve also bought Google. And he bought an Amazon. And the Qs. Yeah, the Qs. Uh-oh. The Qs were good. I mean, the Qs were definitely a good trade. I just didn't want to be too highly correlated with Amazon and the Qs. That's the reason I just decided to go with one. And this is Steve Burns. Okay. Good. Well, listen, if you have any other questions, let me know. In the meantime, if you, in the meantime, let me just quickly put in my little daily plug. Let everybody know that I do offer private one-on-one coaching and teaching lessons in the evening time via Skype. I do love to teach. I've had good success with my clients. I do have a course. It's 5 sessions. Each session is between 2 and 3 hours. And like I said, it's live. It's just you and I, one-on-one. I have a lesson plan. I teach basically 5 different approaches. The first part of the lesson I teach. The second half, I ask you a lot of questions. I have you teach it back to me. We do a lot of chart study. We talk about setups and psychology and position sizing and correlation, all the stuff we talk about here, but just in much greater detail, right? And so it's a pretty intensive course, and I think the best part about it is just that we go through so many charts, and I have you break down the charts. What's good here? What's bad? What's the risk to reward here? What's your next trade? Did you get out? Where you're getting in? Where did you take profits? All the kind of stuff we do, right? So if you've been thinking about it, please reach out to me. You can send me an email. The email's in the description of this video, of this YouTube video. You can also send me a message on Twitter. But before I take on a new student, I like to have a free Skype call with them, and it is free, and there's no sales pressure. Honestly, I promise you. I just only want the best students that are, really, really dedicated. And so, they're a lot of work. These lessons are a lot of work. So I just don't want tons and tons of people. I just want the right people that really want to learn. But, and so that's why I like to have a little bit of an interview on Facebook with them, just to know more about them, about their trading, about their trading challenges, what their goals are. You can ask me any question, and then if we decide it's a good fit and things line up well, then we can schedule the first lesson. So like I said, if you want to do that, And if you've been thinking about it, it's a good time. The course is $1,000, but I definitely think it's worth every penny. And I think you'll definitely be a better trader and be able to have put together a real plan in trading. So reach out to me. Emails in the description or on Twitter. And then secondly, if you like today's podcast, if you find the information valuable, I really would appreciate it if you could just hit the thumbs up button before you leave the room, when you leave, or before you leave the room. It helps to build the channel, helps to let Google know, that there's some good content here and so forth. So there's a lot of people out there that need help with trading, and I think, a channel like this could definitely help them. Okay. Kamal says, I know it's correlated, but hopefully the signal holds tomorrow. Yep, I get it. I totally get it. I totally get it. I mean, they'll most likely go up or down together, right? But I definitely do hope it holds. And, if they're talking about cutting ink or cutting that tax, the payroll tax, yeah, that'd be huge. That would be huge. Kamal says, glad to be in Steve Burns' company on Google. Yes, sir. Always good to be in with Steve Burns, for sure. But look, it's a good risk to reward ratio. Under 30, over 30, under the 250 and the 200, back over the 250, 100%. Any of those are good, right? But the reason I just decided to go with Amazon, just because one, I had some Apple puts, right? There's something to that. That is correlated. But that's the only reason. So I'm on risk watch right now, obviously. And then I'm glad I got a little Disney as well. Little something outside, did close above that low there, so a little bit of a false breakout here, under 30, over 30, and it had a nice V2. So we'll see. We don't know what's going to happen, but I did take a half-E on that because of the 200-day moving average. And again, just like I said, I want to do this and show you my prices so you know exactly what I'm doing, and have full transparency on my prices. And like I said, it helps me too. It helps me from getting those little devil on my shoulders wanting to like jump in and buy a ton, right? Like obviously I wish I would have bought a ton earlier today, but it would have just been gambling, unfortunately, right? It really wouldn't have been a plan. So I thought this will be good to be transparency. Also, protects me from me, because I don't want to be able to show you a bunch of stuff. You're like, Greg, why would you have bought that? That wasn't part of the plan. So it keeps me straight and keeps the channel transparent. So that was my idea last night. Okay. Well, market's down after hours now. Jeez. Bernie Sanders campaign cancels Ohio rally Tuesday due to coronavirus. Wow. Wow, wow, wow. Okie doke. Now, let me see if I missed anything. Oh, the VIX hit an intraday high of 62.12, its highest level since 2009, with data going back to 1990, with the only period with a higher VIX was in October 2008, 2009. The most volatile market in over a decade, I imagine. We don't need to look at the VIX to know that, right? We can just see what's happening. All right, so Clorex is gone. Steve, nice trade here on IBB. Bing He had a nice trade here so far on SAP. Google with Kamal and Steve, and the Qs with Steve Burns. What's happening here? Come on, Greg. Get it together. Yeah, there we go. Now, I don't think Kamal bought the cues, right? No. Bing He, Greg, do you check on resistance above when you enter a trade? I just saw SAP had a bunch of trades done in October just above my entry price. Well, yeah. I mean, I always do look at resistance above. I mean, the lows here, they're going to be resistance on the way up. I mean, not 100%, but likely, right? That's why, you know, I talk about false breakouts to the downside, like on Amazon. See how we had the previous low and now we're back above it? So that's a false breakout to the downside. We had this previous low here. We're back above that. So now I have the support underneath me instead of above me. Like here on IBB, here we have a low. Today we went below it and then back above it. So now that support is below me again instead of above me. With SAP, you know, you have these lows above you, so that acts as resistance above. So yes, I do. And I like to look on, you know, multiple time frames as well. On the weekly, you have the third ATR channel above you and the 100-week moving average above you. You know, if we look at Google, well, we're above the 50. That's good. The Qs, see, do you see how on the Qs we have the -1 ATR channel right above us? Very likely that's going to give us some kind of resistance above. So I like to look at resistance above both on the daily and the weekly. All right, so Apple is down $1 after hours. Amazon is down $5. Disney is down 86 cents. And the SPY is down $1.39. Qs are down 74 cents. Google's down 550. So we'll see. I mean, you know, that's not much on a big up day like this, but let's hope that Bernie Sanders rally news. Wow, what a day. Up 1,000, down 100, back up 1,167 points. It's just, it's bizarro world, everybody. But glad to have a profitable day. That's all I can say. Kamal says, Greg, I have a question. Let's say your unit size is $10,000 on buying the SPY. Do you buy the same dollar amount of SPY every day, or what's your formula? Yeah, I do. I do, just pretty much. I mean, you know, I know I say it's 10% based upon on whatever your capital is, but generally what I've done is you know, let's say you have 10,000. Well, let's just say your account is $100,000, and you know I'm just going to buy, let's say $100,000 account equaled basically 100 shares of something like on the SPY, right? It doesn't, but let's just say. So does that mean that one day I'm going to buy 101 shares and the next day I'm only going to buy 99 shares or 98 shares? No, what I've just kind of started, I took I figured out 10% of my account, how many shares of SPY that was going to buy, and I just buy that every day. I mean, I understand some days I should buy a little bit more and some days I should buy a little bit less, but you know, maybe halfway through the year, I'll just recalibrate it and go, okay, instead of buying 100 shares, I'm going to buy 105. Or, I mean, you could do it every day if you just wanted to do the math on it, but I was just trying to make it simple. But But again, to answer your question, no. Basically, whatever my account is, divide by the amount of shares. That's going to give me a certain amount of shares to buy every day at the close, sell every day in the morning. If you wanted to do it specifically, yes, then, just instead of buying 100 shares, maybe buy 101 or 102 or 99 or 98, depending if your account's going up and down. But I think I'm just going to look at it maybe like once every 6 months and just kind of recalibrate. So at 6 months, if the account's down and now I'm only supposed to buy 95, I'll probably just continue with 95 and just do it every 6 months or so and just get a baseline. Does that make sense, Kamal? Andrea says, state of emergency declared in Mass. Okay, good, good. I'm glad that makes sense, Kamal. If you want to just do it specifically, yes, just every day you could just take 10% of whatever the account balance is. And nothing wrong with that. It's the more specific way to do it, but pretty close anyway. Or if you've had a big, huge move in your account, then maybe do it then. Or if you have had a big, huge, more importantly, if you've had a big, huge move down, maybe adjust instead of 100, go to 9. If you lost 10 grand or something, go to 90, right? All right. So Apple puts down to 245. I have people ask me about puts and selling puts, and the time to sell puts, like to get the most money for the premium, is when volatility picks up, because you have time, you have price, and you have volatility that all factor in what the price of an option is. And time and strike price are very distinct, they're black and white, but volatility is where fear comes in. And that's generally where option sellers make the most of their money, is when the increased volatility comes in. Okay, well, listen, if anybody has any other questions, please let me know. I'm happy to answer them for you. It's a beautiful day here in Utah. I'm going to get out with Katie, go for a little hike, get a little sun. I've been watching F1 Drive to Survive on Netflix. Man, I love that F1 racing. Stuff's so good. It's such a good series. All right. So Apple, Amazon, Disney, and SPY, new positions. Again, Apple's puts, sold puts down to 245. Amazon full position over the 200-day. Disney half position because it's under the 200-day. SPY. Let's take a look here. Amazon, I'm going to be looking for a rejection of the 50 RSI or the 50-day moving average. That's one approach, right? You could have an approach where you just traded this mechanically and said, hey, I'm just staying in this baby until it's, as long as it's over the 200, until it closes back under the 200. Whether it's way up here and that's your exit, that would be fine. Yeah, that's one approach. Another approach would be, okay, I'm going to stay in this until either it closes under the 200 or it rejects the 70. That's a different approach, right? Disney, my ultimate profit target definitely going to be up here. I'm going to, if it rejects the 50 RSI, I would get out of it there. This is the kind of trade where I would almost certainly want to get out if it rejects the 50. The Amazon, I may want to take a longer term view on this. I'll just have to decide overnight. And then of course SPY, this is just an overnighter, right? So I think it's a good combination here. We may have, selling puts with Apple, may have a little longer term with Amazon, may have a shorter term hold on Disney, maybe 2, 3, 4 days. and SPY, of course, overnight. Andrew says, we had 72 degrees here yesterday. Crazy. 72 sounds pretty nice right now. Kamal, damn, I love F1 too. I used to be a huge Schumacher fan. Yes. Have you seen it on Netflix, Kamal? F1 Drive to Survive. It was the second season. Really good stuff. I like that Max Verstappen. Man, he's a serious dude. And then, of course, Lewis Hamilton from Mercedes. But that Max Verstappen, I can't believe these guys are like 22, 23 years old driving these F1 cars, but they're like 50-year-old. They're like in their 20s, but they seem like they're 50 because they are freaking serious. Yeah, Schumacher was great. One of the greats. Okay. Well, listen, glad that we had some profits today, finally. But remember, please, if you've lost money in the last few weeks, don't try to make it back all at once. Take the it's a marathon. It's not a sprint. I know probably every fiber in your body wants to load up and make it back quickly. I mean, who wouldn't? It would feel good, right? But you put yourself in a lot of jeopardy of not being able to stay in this business. So don't risk your lifestyle or risk trading just on one bad drawdown. Just reset. Just take it day by day, position size correctly. Definitely watch out for your correlations right now. Kamal says, no, I have not. Going to binge it since you mentioned it. Yeah, first season was last year. This was the second season. Serious, Kamal, you're going to freaking love it. Send me a message on Skype how you like it and let me know what season you're watching. But yeah, I love it. Thank you, InStyle 420. Appreciate that. So listen, I just want to leave you off two things. One, please go out and try to do something nice for somebody today. Just be nice and pleasant. Hold the door open. Maybe take an interest in their story. Just something, a nice gesture, really may make a difference in their day that you don't even know about going forward. And if you could do that for an animal, that would be great. And a person, that would be great. Both would be better. I watched that movie last night with Tom Hanks about Mr. Rogers. Holy smokes. Man, did that bring back memories of growing up with Mr. Rogers. But I think Mr. Rogers is the epitome of somebody that tried to do that every day. So let's try to be like Mr. Rogers, right? Probably one of the best people in history, I imagine. And then two, just one more time, if you like today's podcast and you like the content and you're learning something, please do me a favor and try to hit that thumbs up button on the way out. Okay. Kamal says the all-time greats were Senna and Schumacher. Oh, totally Senna. Yes, totally Senna. That's a great documentary with Senna as well. Sad. TradingView shows Disney RSI at 2810. Really? I'm just wondering, it's down 85 cents in after hours. So let's take this down about 85 cents and see what it would show. 85 cents would put it at about 1060-ish. Yeah, 1060-ish. I don't know. I don't know why it shows that. All right, everybody. Thanks for coming today. Appreciate it. Always nice to see you. Have a good rest of your day. Hope to see you tomorrow, okay? Take care. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.